The global financial system is entering a historic transition that could redefine economic power for an entire generation. The United States has relied on the dominance of the dollar to maintain unmatched influence over world trade and capital flows. This dominance gave Washington enormous leverage in diplomacy, military strategy, and global governance. Recent global shocks have shown that this dominance may no longer be unquestioned. The United States now holds more than $34 trillion in national debt, which has begun to concern foreign investors. Rising interest costs are forcing the government to borrow even more simply to service existing obligations. Persistent inflation has damaged the perception of the dollar as an unquestionable safe haven. Several European economies became more vulnerable after the energy crisis, which exposed weaknesses in the dollar-centered financial network. China recognized this moment of uncertainty and began expanding its own monetary sphere of influence. The digital yuan project is helping China accelerate cross-border transactions with countries that rely on its supply chains. Pilot programs for digital yuan are expanding quickly across Asia, the Middle East, and Africa. The United States has not yet implemented a digital dollar, which has raised concerns about losing technological ground. Russia shifted rapidly toward non-dollar trade to shield itself from Western sanctions. India expanded the use of local currencies for energy imports in an effort to reduce exposure to dollar volatility. Brazil intensified cooperation with regional partners to strengthen alternative payment systems. South Africa promoted BRICS as a rising platform for multipolar financial coordination. These developments increased speculation that BRICS could eventually challenge the dollar-centered world order. The planned expansion of BRICS now involves more than 20 countries with significant geopolitical influence. Saudi Arabia expressed interest in joining BRICS because it seeks more flexibility in energy sales. The United Arab Emirates adopted diversified payment strategies to reduce single currency dependence. Egypt advanced new financial cooperation deals that support a wider range of currency options. Turkey began exploring alternative payment channels for regional trade and energy transactions. These national strategies suggest a slow but steady global shift toward a multi-currency system. Gold accumulation by central banks reached the highest level in half a century. China steadily increased its official gold reserves for more than a decade. Russia expanded domestic gold production to strengthen its strategic financial base. India's rising gold demand reflects both cultural tradition and economic security concerns. BRICS members collectively increased their gold holdings to prepare for long-term monetary competition. The idea of a gold-supported cross-border currency has sparked intense global debate. Such a currency could provide a more stable foundation for countries that distrust fiat-based systems. The United States monitors these developments carefully because they could weaken the dollar's influence. Washington relies heavily on financial sanctions as a strategic tool to enforce geopolitical objectives. Many nations now view the SWIFT network as a politically sensitive system rather than a neutral infrastructure. This perception accelerated the search for independent payment networks. China's CIPS system is gaining acceptance among banks throughout Asia. Russia expanded its SPFS network to support regional trade and financial cooperation. African countries are adopting digital payment solutions faster than many developed economies. These new systems reduce friction in trade and help nations avoid currency concentration risks. A multi-currency system could reduce global vulnerability to single-country policies. At the same time, such diversification may increase uncertainty and competition among major powers. A decline in dollar dominance could trigger significant geopolitical shifts. The European Union continues to promote the euro as a stable alternative for global commerce. However, internal economic divergence within the EU limits the euro's global potential. China's deep trade relationships with Europe create opportunities for non-dollar transactions. The Middle East is reshaping global energy flows with new strategic partnerships. Saudi Arabia increasingly focuses on long-term economic ties with Asian markets. This realignment could weaken the historical link between oil trade and the dollar. Energy exporters are experimenting with payment options that reflect diversified geopolitical interests. Liquefied natural gas markets adopted several new currency agreements in recent years. These developments mark a shift toward more fragmented global energy pricing. Rapid growth in Asian economies moved the financial center of gravity away from traditional Western hubs. Singapore emerged as a global leader in digital financial infrastructure. India adopted digital payments at one of the fastest rates in the world. African fintech companies expanded access to financial services across underserved populations. Latin American countries invested heavily in digital payment innovation. BRICS leaders envision a world in which economic influence is distributed among multiple power centers. China's industrial strength supports the transition toward diversified trade settlements. Russia's energy resources provide leverage for alternative finance systems. India's technology sector adds significant momentum to global financial digitalization. Brazil's agricultural power strengthens the economic foundation of South America. These elements together intensify the debate about the long-term future of the dollar. International demand for United States Treasury bonds has shown signs of slowing. China has reduced its holdings of American debt over recent years. Global investors are shifting a portion of their portfolios toward emerging market assets. Gold prices rose dramatically due to geopolitical uncertainty and monetary expansion. Silver and other industrial metals gained importance as strategic resources. Cryptocurrencies became an alternative store of value for investors seeking decentralized options. Bitcoin's volatility did not prevent its adoption as a hedge against monetary instability. Decentralized finance introduced new concepts for global capital flows. Central bank digital currency projects redefined the boundaries of monetary authority. China's digital yuan became the most advanced example of state-controlled digital money. The delayed launch of a digital dollar raised concerns about strategic disadvantage. The European Central Bank accelerated research on a digital euro to support future competitiveness. Digital payment platforms disrupted traditional banking faster than experts predicted. Banks worldwide are investing heavily in new technologies to remain relevant. Cross-border digital infrastructure is becoming the foundation of future global trade. Artificial intelligence improves fraud detection and financial stability mechanisms. Blockchain technologies enhance transparency and reduce settlement delays. These innovations are reshaping global markets in real time. The success of future monetary systems will depend on international cooperation. The dollar's dominance is now challenged by the demand for faster and more efficient networks. BRICS expansion encouraged broader acceptance of local currency trade. Diversified payment methods increase resilience in emerging markets. Energy exporters are testing new financial models that bypass traditional structures. These models could reduce the global share of dollar-denominated transactions. The dollar remains the most liquid currency in the world with unmatched depth in financial markets. A rapid collapse of the dollar is extremely unlikely because global systems depend on it. A gradual decline in its dominance is more plausible over the next several decades. Innovation capacity in the United States remains a powerful factor that supports the dollar. Military alliances and diplomatic influence also reinforce the currency's global role. Even with these advantages, more countries are preparing for a multipolar currency landscape. Shifts in capital flows reflect growing interest in alternative financial hubs. Nations are strengthening domestic financial institutions to support future independence. Global finance is slowly moving toward a more diversified architecture. This movement could permanently reshape global economic relationships. The resurgence of gold signals a renewed desire for tangible monetary anchors. The winners of the new financial order will combine technology with strategic resource management. The long-term balance of power will depend on how quickly nations adapt to digital transformation. The world is entering the early phase of a transition from a single reserve standard to a multi-reserve reality. Once this transformation is complete, the global monetary system may never resemble the one we know today.